So just a little intro about me. If you don't know me, I graduated from Westminster with my business administration degree and a minor in sociology, and I'm currently halfway through my MBA at Westminster right now. I love helping people and organizations to coordinate them with the answers to their problems, and I love organizing everything. So I know it's not fun for some people, but that's truly my passion. The content of my session has to do with gearing up for business success. And to start that off, I'm going to switch screens. Just a second. And I will show you the presentation. Okay, so I'm going to start off with a story. I had a 1988 Honda Prelude when I went to college, and it was a manual, a stick shift, and I found out that it was, so through that experience, I found out it was important to get into a low gear when you're going up a hill. If I didn't get into a low gear, the car would be frustrated and I would be frustrated and I would burn gas, rubber, and possibly bump into somebody. And so that was a hard thing to get used to, but until I hit the brakes and tried again, I wasn't able to get the product or to get to where I wanted. And so that's similar to gearing up for business success. We have, as a business owner, you have an idea and you start full force. You kind of go into things really crazy, like you want to get there really fast, and sometimes you think, I'm not getting anywhere, and it's really frustrating. So many business owners would really benefit from slowing down just a little bit. And today we're going to talk about that. Hang on a second. Okay, sorry about that. So we're going to talk about what needs to happen from seed to startup, and that's organization. Focus on. How's it going? Hi, Sam.
Hi.
If you aren't talking, if you could just mute your mic, that would help us out a little bit too. And just to let you know, we're going to open up questions. If you have any questions, feel free to open the chat up and let us know. We'll answer throughout the presentation or at the end of each session. So during the growth to established phase, we're going to work on lean operations. And then from established to expansion, we're going to take a pause and work on financial situation. And then you can't see, I think that it covered it up, but if you move the little video screen over, the last phase over here is the exit of the phase of the business strategy is exit. So we're going to talk about exit strategy. So the first step from seed to, I'm going to scroll down just a little bit, from seed to startup, we need to stop what we're doing and know that we need to create awareness. This is a sales funnel. It's just a typical one that you might find anywhere. You hear about sales funnels and you're probably familiar with them. The first little while of running your business, you really are you're just creating traction, just like that car. You're just creating traction. You need to know that first year, about the first year, you're just building awareness with your company and hoping that it moves to consideration, somebody considering your product or service, and then preferring, deciding like which type of product or service from you they're going to buy, and then taking action, building loyalty, and then loyalty to your brand, and then from there, building advocacy. So that's where they will then come back and they'll they'll tell other people about your product. So the first step to organizing the awareness of your company and building that seed to startup phase is to really hunker down and think about your mission, vision, values, and goals. What you want your company to be represented as. Do some market research to find out if that's really what people want, and then adjust things. Make sure that you stay true to your values. That's a really important one, because you'll work really hard to create your product or service, but you won't be happy unless it produces the values, or it aligns with the values that you have for your company and your product. So you really need to put that in place before you move to website and social. If you've built a website before that, then you might have misbranding, you might have mismessaging, and you might be targeting the wrong audience. So you need to do the mission, vision, values, and goals, set that in place, and then move forward from there. So then we create the website, test out social media strategies, because that has a huge amount to do with building awareness. There are other ways that you can build your company, word of mouth, on the street, lots of things like that. But social really builds, and website presence really builds your credibility and awareness in the business world. Let me see. The last step of that is to build relationships. Organizing perspective. So as you organize things, realize that reaching out to other companies, collaborating with other companies shares your awareness. It also shares your customers with their customers, and builds twice the amount of awareness with the customers that you want to have. So people will relate to you more as they hear from the other companies also. At this point, you can organize people into prospective customer groups and send out specific emails to each of those groups. When you're sending specific emails out to the groups, it will help them to feel that you care about them specifically, because they're not just getting a spammed email that goes out to everyone. So to move on, then the next phase is to talk about growth and established companies. That's the phase where you have built the product or service, and you're really trying to grow it from there. You're going to talk about lean operations. So lean is just basically cutting or trimming the fat, trying to figure out what from what you've done already you need to get rid of or streamline, and what has worked and what would work better. So at this stage, many businesses think they can get to established phase within a few months, and it's really hard on them when psychologically or emotionally, and they feel like they haven't made it in just a few months. And it's important to remember that you don't fail if you don't give up. That's one of the important things. Just remember to look at how far you've come, and remember the progress that you've made. And at this point, you've cleaned up a lot of your processes. You've tested a lot of things, and you need to remember that you've done all of that so that you can move forward. So 3 things that you can do during this phase are: you can get a CRM to put your clients into. This is a customer relationship management system, and you will then be able to streamline who gets what information, and those customers that you never heard back from won't slip through the cracks. You'll be able to reach out to them and feel that they know what's going on with your company, and they'll know that you didn't forget about them. The next phase is to review and train. This is the next part of the lean operations phase. This includes review of quarterly goals, review of mission, vision, values, and goals. So with those, if that mission statement you created in the beginning, if you feel like things have changed, you need to review it and decide if it was a good change or if it has helped you improve. And if it helped you improve, then you need to rewrite the mission, vision, values, and goals at that point and include that in your messaging that's going out and in your training that's being presented to other people within the company. How you do things, the processes that you set up. At this phase, you're starting to know what works and what doesn't, and you'll put really good processes into place to create those manuals, process manuals to help with the training. The next part that you'll do during lean operations is to set goals for your company. A lot of people try to set sales goals in the beginning and they feel really bad if they don't make them, but at that phase, we're still testing a lot of things out. So during lean operations, you can set goals and set incentives and begin to see the progress that you've really made at that point. See what has worked, what hasn't. Review them at the beginning and the end of each month to see how you've done. The next phase that happens from established to expansion phases of your business. This is where people know about your company and you're thinking about branching out and creating another company or growing your company a little bit bigger. So you're gonna start thinking about financial goals at that point. You've been thinking about financial goals before that, but this is where you really kind of tighten down on finances. You either see what you can do to affect cash flow and re-strategize, rebrand things a little bit, make sure that you're following what you're staying true to. And this is when when the business has done well at processes, they're meeting reasonable sales quotas, they have a great relationship with customers, and the product is selling well. So then we need to focus on cash flow. So that's looking at what your return on investment is looking like, how your assets are being turned over, if it's debt and asset management is being managed appropriately, and what your market value is compared to other companies in the same industry. After we look at cash flow items, we look at strategizing. We look at building sales goals, changing them to stretch us a little bit more. We relook at the mission statement, and we create a really good client life cycle. So a client life cycle is where the company goes from where you write down what effect your product or service has on the customer from start to finish. So that would be like the customer is interacted with this product by hearing about it on social media, and then the next stage is they contact you about the product, and the next stage is the company reaches out and gives them a free trial, and so that's what the client life cycle is like. You're really honing in. You created the client life cycle in phases before this, but you're really honing in on making sure that the client or the customer has what they need when they need it. This is when you can focus on streamlining the customer life cycle so that they can be happy with your product or service. And then the last phase is exit. The exit phase of the business life cycle deals with exit strategy. This is when you've been really successful at your trade, you're doing well, and you desire more time away from the office, or you've done well enough and you want to work on a different venture. So you're starting to wonder if it's a good, you wonder if it's a good time to sell, or if you should wait a year. You need to also think about the contingency plan. What will happen to the company when you sell it, if you do sell, and what will happen to, since if it's a small business, what will happen to your family and your finances as well. And I believe that Jason and Sean may even touch on some of that as we get to their sessions, because they're really good at the business and estate planning. So the sale of the company, we need to look at that phase, how to best sell, who to sell it to. That's really important. This is your life's work. You've really put a lot into it. You don't want to sell it to just anybody, or maybe you do. Maybe you just need to get it off of your hands. So that's, at this point, we're thinking, who we sell it to, and how to get the results out of the sale, whether it be the return on investment out of that sale, or whether it's a good idea to wait another year. The contingency plan phase we talked about a minute ago. This covers what will happen to your family or investors when you sell, and will they get a payout? Will they be happy with the sale? Do they need to be happy with the sale? And if you want to stay in the game, yes or no, then how to change your role to do less, or things like that. Many times people wait until it's too late. They wait until this phase to come up with a plan. You're really planning the business exit strategy from the beginning, but this is when you carry it out. So I'm really grateful for this opportunity to talk with you guys about the business success model that Gerber Business Solutions has come up with right here. All businesses can utilize this, whether it's small, franchise, or entrepreneur or solopreneur. Gerber Business Solutions can coach you through this process, or we can consult with you and do some of the work if you don't have time for some of the phases. We're really grateful for this opportunity. We deal with marketing, technology, and process, but if you have something that needs to be done that is not one of those, we have partnerships with like Mazuma and Sumsion Business Law and other companies, and we can get the help to you that you need, or refer you to someone that's really good. So without further ado, let's see. I didn't say questions, but I didn't see any along the way. Are there any questions that you guys have? Feel free to type them in the chat or shout them out. Okay, so if you do have some questions, then feel free to type them in the chat as we go, and we'll answer them at the end. If it has to do with me, just write Emily next to it, and then we'll save some time at the end as well. So without further ado, I'd like to turn the time over to Jason Zundell from Sumsion Business Law.
Hello, everyone. Thank you so much for inviting me here, Emily. That was a wonderful presentation. It really covered the phases of a business well, and gave some excellent tips and strategies for surviving many of those stages. As mentioned, my name is Jason Zundell. I'm a business law attorney at Sumsion Business Law. Married, have 3 kids. Right now we have a 1-month-old at home. So if I start to doze off, please just let me sleep. That would be fantastic. No, I do appreciate the chance to be here. Let me get my PowerPoint up on the screen. That should do it. My presentation today is entitled Legal Nuts and Bolts for Small Business Owners. As mentioned, I am with Sumsion Business Law. We are a full-service business law firm located in Provo, Utah. We service all of Salt Lake County, Utah County, and have some dealings with the far north and south, but mostly in their areas, and are capable of and have served, clients across the country, really. Our focus is business law, and as that ties into every aspect from litigation to transaction, everything. But that's more than enough about me. Today we're going to talk about contracts, employment compliance, the top 3 challenges, other than those first 2 mentioned, that a small business owner will face from a legal perspective, and then try to leave some time for the questions. Same spiel with Emily. Feel free to type those questions in as they go, if they come up based on what I discuss, or shout them out at the end. Going to try to leave a couple minutes at least for those, or if not, we can be done early. Either one works for me. Let's start with contracts. The reality is that this is a 15-minute webinar, and there are law school classes and week-long seminars that cover each one of these individual topics. So you do have to realize we are talking from a bird's eye view here. The most important topics that are directly related to what you will see as a small business owner. And then as other questions come up, we'll try to answer them later, or feel free to reach out to me. Emily will be sending out our contact information as well. So let's talk about some of the common questions that come up regarding contracts. Any business activity should have a contract of some sort. Now, most people think contract, 50-page document, my name, their name, initialing pages. No, if you think about it, every time you go to a grocery store, you get a receipt, and that's a contract that reflects your payment of money and your receipt of a product. And in that vein, all of your business activities should have some sort of written contract that reflects it, whether it be a receipt, an email acknowledgement, some sort of acknowledgement. Now, to get into the more important details, the bigger the interaction or the transaction, the more important the contract becomes. Anytime, the rule of thumb that we often use is anytime a transaction is going to be 5 to 10% of your gross annual revenue, you need a written contract that's been formalized between you and the other party, whether that's an employee, whether that is a supplier, independent contractor, if you're on doing software, the IT guy, however that works, that should be formalized in a contract to protect you and to protect them. When you're signing a contract, the devil is in the details. This is such a true statement. Especially as you will find being small business owners, you are not the party with the most power. I'm sorry, but that's just usually the case. And so when you're receiving and signing these great big contracts, you are the one responsible for either hiring an attorney or yourself doing your due diligence. What you do not read can hurt you. And when you receive these contracts, it is your responsibility to go through them and look for the details. Now, the 2 provisions that are most important for a party that does not have the most power are an attorney fee clause and a limitation of liability. I'll go into a little bit of detail with those. The attorney fee clause states more or less that the prevailing party in any dispute can and will receive their attorney fees, which means that when you're going up against a behemoth, you can still survive because in the end, they are on the hook for paying the fees if they are the one in breach of contract. Very, very important protection. It will be the difference between an attorney saying, I'm sorry, you have no chance here, and, oh, I'm going to get my fees for sure. Yes, let's do this. I'm on board. And often even waiving those fees until some sort of payment is received. And then the other one mentioned is a limitation of liabilities clause for when you are in breach of the contract, which is an unfortunate reality that does happen, that limits how much you have to pay to the 4 corners of the document. They're not going to be able to say, hey, you breached this and you hurt my feelings and I'm going to take your whole business. No, that's not fair. It happens, when you're not careful, but it's not fair, and we're going to limit that as much as possible within the contract. When should I consult an attorney? As mentioned earlier, the rule of thumb, 5 to 10% of your annual, you want a good contract. If it starts getting higher and higher, 20, 25, especially 50% or more of your annual return, it is worth the investment. You spend $100, maybe even $1,000 to save yourself hundreds of thousands of dollars later on by having someone with experience come in and look at it and give you the go-ahead, yes, this is a good contract, it's fair to both sides, or being able to recognize those scary provisions that, oh man, you put one toe out of line and they literally are going to own your business. And so as the value gets higher, just be more careful. You know, these opportunities that look like the breakthrough opportunity to move you from those initial growth stages mentioned to, you know, the business working stages could end up being not what break you through, but what break your business if you're not careful. Now, if you believe someone has breached one of your contracts, the best rule of thumb is to do your research first. So look at the contract that you have. Ideally, that's going to be the case. What is required? You know, do I have to give notice first? Do I have to do so within a certain time? Or am I going to waive my claims? Look through and do your research first, and then start to take action. You have to be as logical and as methodical in these cases as you can, because as you allow emotion to take over, you start making mistakes and you start losing your opportunity to recoup any of the difficulties that have happened. Employment compliance. This may not be applicable to all of you, but if you have one employee, and even if you have one independent contractor whom you deal with on a regular basis, many times you are on the hook. You are responsible for the federal regulations that cover employment compliance. And I don't generally like to do this, but I feel like this illustrates such a good point. Let's click through these and see what they are. Okay, these are just the federal requirements that have to do with employees and having employees. Right? It's significant. The same with what happened in contracts. What you don't read, what you don't know, can hurt you. You are required to follow each of these guidelines and federal rules if you have employees. Now, some of these, admittedly, only come into play if you have a certain number of employees, if you have a certain amount of revenue per year, if your business crosses state lines in some way or another. You know, they are triggered by certain events, but they're triggered more often than you think. And when they are triggered, you are required to follow them, or there can be stiff penalties. So, I mean, this could take years of study to know the ins and outs of each of these ones. We're not going to do that here. Some of the more important that most often come into play for small business owners are hiring and firing policies, employment and employee discrimination, and compensation benefits, income taxes. And the ideal scenario is to have an expert manage those. That's just not viable for many entrepreneurs. You wear so many hats. You're the CFO, the COO, the IT guy, and the CEO all at once. And it's your responsibility to manage these. I'm taking away business for myself by doing this, but the reality is Google is your friend here, if you do it correctly. Wikipedia is not the answer. Wikipedia is not your friend. Google is. Do some research, find reputable, good websites that post and publish full information and not just teasers that get you to use their services, but full information, SOPs, policies and procedures, and these will give you the guidelines, the framework to create your own. And those are what will protect you. Written policies and procedures, guidances for what happens to when you hire and fire anybody. Discrimination guidelines, you can go to these different federal requirements to their websites and print off the requirements. post them somewhere that the employees can see, or send them to the employees. Say, hey, I follow these. This is the policy and procedure. And by doing that legwork, you save yourself so much hassle and heartache when those situations do come up. Okay, let's now go into some of the top 3 legal challenges as you begin to create and run your small businesses. Again, these most often occur in the earlier stages mentioned by Emily, the growth and the seed, growth, and development stages. How should my business be structured? The biggest mistake you can make on this first one is by not doing anything, which the default is understood that you are running a sole proprietorship, you're not registered anywhere, you're running it basically individually. And that's so scary, because any lawsuit that is generated as a result of your business can then creep into your personal financials, right? That they can go after your home, they can go after your investments, your checking accounts. You are on the hook individually if you don't have the proper business structure laid out. And the structures themselves vary widely. You can have LLCs, S corps, C corps. You can decide where you're going to register in Utah, in California, in Delaware. You can have an LLC taxed as an S corp. There's so much flexibility for so many different types of business structures and business needs. And it really is vital that you get that figured out from the very beginning, rather than once you've developed and are going. Let's build the foundation first. What protects my business as you get going? As mentioned previously, the policies and procedures are super important, especially what am I going to do when big contracts come up? What are my policies for employees? My HR policies, hiring, firing, discrimination, managing the taxes, W-2 forms, all of that you are responsible for if they are employees. And you can get away with maybe a little bit less if they're 1099, if they're independent contractors. But again, that's a discussion for a whole nother day. Before we go on, actually, let me touch on insurance. Insurance, especially umbrella business insurance, so important and surprisingly affordable. If you can find an independent insurance agent that specializes in that, I have several contacts. I refer over to him all the time, because it makes the difference between, okay, I'm fighting this battle on my own, or I've got this insurance, umbrella insurance, that's going to pay for an attorney to come in, protect me, get things taken care of. All right, now we can move on to point number 3. Protecting confidential information. IP refers to intellectual property. So your app development, any copyrights, patents, trademarks. Take the time and make sure those are protected from the very beginning. You hear all the time the stories of small business owner, entrepreneur has a great idea, develops an application, comes up with an invention, gets a prototype working, and then his employee or his partner or her friend who heard the idea takes it and runs with it and totally runs them out of business. Well, if you protected these things properly as you went along in this process, you can take all of that back. It's yours. It comes back. If not, you're more or less left in the dust, which happens an unfortunate amount of the time. All right, what are my next steps? I'm a small business owner. I'm working from home. I'm just starting. I've got some seed money from angels, investors, or it's just sweat equity here. I don't have the funds. I don't have the ability to go out and get the attorneys. I know it sucks. We are so expensive. I blame it on law school. But the reality is that we are expensive. It's something that you have to budget for and prepare for. So if something comes up, your very first step is research. Take the time to figure out what's going on. Read your contract, reread your contract, do it a third time, right? Look into insurance, find out if that's applicable, find out if you're going to be covered. If someone is complaining about employment discrimination, you've got a sexual harassment case, you've got an immigration issue. Research. It is a wonderful day and age of information availability. Take advantage of that first. Collect all of the data, and you will save yourself hundreds, sometimes thousands of dollars if in the end you do have to go to an attorney, because it's there, it's organized, and I can take a look and I can say, yay, okay, it's all right here. It's going to take me half an hour to synthesize and come up with our strategy, rather than then taking 2 or 3 hours to do what I just said, organize it, get the details from you, pull out the important stuff. So start with your research and then take it to an attorney, right? There are many attorneys that will, we are business people too. We understand what it's like, especially those of us that focus in business law and especially small business administration and legal issues. Come to us and say, hey, here's my situation. I have a budget of $500, of $700, of $200. Please take and do with this what you can under that budget. We love to do that. We love to help. That's what me and most attorneys, we love to help. We love solving problems. That's why we do what we do. And we will do our very best under those circumstances. And frankly, we usually go a little bit farther, even under a fixed fee, because we want to do a good job for you and we want you to come back. And we take pride in our work. So there are options. It's not always, okay, I have to talk to an attorney, there goes my annual budget for, well, everything. No, we can work things out in a way that will serve both parties. And then finally, mitigate your risk. Do the things that I've talked about right now and do them right now. Get those policies and procedures in place. Sign good contracts, make sure the contracts reflect the actual agreement, and the devil is in the details. I like my sayings, I like my phrases, but another one that is very true, an ounce of prevention is worth a pound of cure. It is the reality. Do your homework first, do things right the first time, and then you will see that the business that you've worked so hard on is your business, and it's successful, and nobody takes that away from you. Thank you so much for having me. I've really appreciated sharing with you. Let me jump back into the chat. And, I see there are a couple of questions here. Let me start with the first one. Jason, what is the next step when you are contracted with someone that has breached a contract with you? Okay, we talked a little bit about that, but your first steps are the research. Get the contract that you have with that person, read it carefully, and find all of the interactions on paper that you have with that person, right? Was it somehow modified via email? Did you say, oh yeah, you do have a little bit more time? Are they claiming that you said that when there isn't? Anything you have in writing is much stronger than the hearsay that happens. So collect all of that, and with that you can present a very strong front in how you approach the person. Approaching them, there are a variety of strategies. I usually recommend approach them first. Show them that you do your research, that you are in control here, and that you're flexible enough to find a solution. If you go to that person and say, hey, you breached the contract, you owe me $50,000, and you can never work in this industry again. Well, that doesn't leave anybody any options, and nothing's going to get resolved. If you go to them and say, hey, I feel like you're in breach of contract, here's my evidence. How can we work together to get this resolved? Do you need a payment plan? Do you need some more time to get the job finished? Is that going to work for me? Do we need to give you more time, but you pay me a little bit more, or I pay you a little bit less? Sit down and work with them. And then, as everything starts to break down, that's the best time to consult an attorney. Very important, though, with the breaches of contract, you must follow the terms. And one of the most important terms is giving notice of that breach, often in writing. Sometimes an email is sufficient, sometimes it's not. Look at your contract, send that notice first off, and then talk to them. It's more important to be official and then show the friendly face than to show the friendly face and then not be able to do anything later.
Okay, thanks, Jason. I'm going to give you 2 more minutes to answer that question from Samantha.
Okay. I'm an independent contractor, receive 1099s. do I need to register myself as a business? This, it's a difficult question, and it honestly depends on how much you make per year. I always recommend that yes, but the reality is that you may not need it if you're making less than, $20,000, $30,000 a year. If that's the total income that's coming in, you probably don't need to register a business. If it's any more than that, you do, because number one, it's very cheap to register an LLC in Utah, and it's like $15 a year to maintain it. But number two, you can also receive significant tax benefits by registering an LLC, having the income come through the business, using tax write-offs. Mazuma would be a great resource to talk about that more in depth. But they're not just safety measures where your assets and your individual liability is limited, but there are also significant tax benefits.
Awesome. Thanks so much, Jason. That has been really informative and really helpful. We're going to turn the time over to Sean. I keep thinking Ben because it has Ben on your name there, but Sean is stepping in from Mazuma to talk to us about tax and accounting services.
Okay, yeah, just again, that was some great information, Jason. Again, I mean, I think some of the things that were asked kind of correlate with some of the things that I'm going to discuss as well. Attorneys and accountants, I like to say we're of the same breed, right? We're detail oriented, and we try to help our clients make sure that they're compliant, that they're organized, and number one, that they save taxes. We don't want our clients to pay any more than what they owe, and that's our job. So just a little bit of introduction of myself. I'm the Director of Operations here at Mazuma, so we have 3 kids. Luckily, all of them are out of diapers, so I'm out of that stage. I've been here for almost 2 years now. And what Mazuma is, if you don't know, is a subscription-based accounting service. We strictly deal with small businesses, generally between $1 million in gross revenue, all the way down to $30,000 or $40,000 in gross revenue. We also do payroll and things like that. Some of the things that Jason mentioned as far as compliance is concerned, we help with that as well. So I'm going to share my screen here. Hopefully we're doing this correctly so that everybody can see it. All right. So my presentation today is the 5-pillar tax plan and saving time and money in 2018. The thing that I think is most important is to explain the importance of bookkeeping. And if we're trying to be organized and compliant in our business, we need to make sure that the books are not only updated on a regular basis, but that the books are correct. And the problem, I think, with a lot of DIY services, similar to what Jason was saying, making sure that you have a professional doing it, is a lot of small business owners or entrepreneurs don't necessarily understand the workings of the relationship between a profit and loss and a balance sheet, and what type of transactions go on either side. And a lot of the times what will happen is a client will, well, not our clients because we do the bookkeeping for them, but a client will do a DIY, use a software or something like that, and then put it on the accountant's desk, in March or April, cross their fingers, say a Hail Mary, and hopefully, everything turns out all right. So the importance of bookkeeping, obviously the definition is to create a record of financial transactions that can be summarized into financial statements, including a profit and loss statement and a balance sheet. Those are the 2 main financial statements that bookkeeping produces. There's others, but we won't go into those right now. so the purpose of bookkeeping, number one, is it shows the health of your business. And so as you're going throughout the year, you can determine how profitable you are or how not profitable you are. And we'll talk a little bit about the consequences of that later. But it also allows you to make business decisions. A profit and loss statement will allow you to, potentially compare and contrast year over year expenses and revenue, month over month, and year to date in comparison to other months, or potentially comparison to other businesses in your industry. It allows you to see whether or not, if you make budgets per month, if you're in line with those budgets. And you can also use information, past information, to potentially project what you're going to be doing not only this year but in the future. Another important reason for keeping your books up to date is to prepare for taxes. And in the example I mentioned previously, I think the norm in the small business world is to, because bookkeeping isn't necessarily on top of mind until after tax season, until a tax return needs to be prepared. You can't prepare for taxes or project what your tax liability is going to be without having an accurate and up-to-date set of books. And so, for example, right now in our firm, we send out tax planning discussion reminders to our clients, and those clients that are up to date can participate in those tax planning discussions, and those projections are very valuable to the client, especially in June or July, when their projected tax liability may be significantly higher than it was last year, depending on the situation of the business. So you need to have an accurate set of books in order to prepare for taxes. And the final thing, obviously, is to tax return. To file a tax return, you have to have your bookkeeping has to be done, and hopefully it's accurate. And so that's the importance of bookkeeping. So I'm going to talk a little bit about the 5 pillars of tax planning. The first one, and Jason mentioned this a little bit, is entity structure. As he mentioned, also legal protection. You're protecting your personal assets from the business liability, and we don't necessarily go into a whole lot. That's why you hire somebody like Jason to explain to you, the legal protection side of things. But like he said, I would also recommend that if you get 1099s, that it's very cheap to register as an LLC here in the state of Utah. It's like $15 a month to re-register that entity every year, and I think that it's worth it to protect your personal assets and to do so. The second thing about entity structure is partners. If you're looking to bring on partners, then you probably want to form an LLC, and we'll go into a little bit about what that means as far as income taxes for each partner, but I'll touch on that briefly later. The third piece is tax planning. And as Jason mentioned, there are entity types that have significant tax advantages to just being a sole proprietor. All entities, including sole proprietors, LLCs, and S-corps, are what we call pass-through entities, meaning that all the net income from those entities are passed through to the owners of the business and taxed as ordinary income, depending on what bracket you're in. And if you have a spouse that works, or a spouse that owns a business, or gets a W-2, your business income is included in, it comes together with any other additional W-2s or any other business that you have that comes together on your tax return to get your adjusted gross income or your taxable income. And so, regardless of whether you take the money out, see, this is a fallacy or a misconception in small business, it, oh, I only pay taxes on what I've taken out of the business, and that's not true. You actually pay taxes on the net income of the business. And so regardless of whether you take it out, you're paying income taxes on it. So the second pillar is capital asset purchases. So an asset purchase, as far as Mazuma is concerned with our clients, an asset purchase is equipment, vehicles, computers, office furniture, or equipment greater than $2,500. So if you purchase an asset, if you purchase, well, a computer, for example, let's say you go buy a MacBook that's over $2,500. In the traditional sense of depreciation, you actually cannot expense that. You can actually you go to the store and you purchase a $2,500 MacBook. You actually can't. Well, you can, but in the traditional sense of depreciation, you wouldn't be able to expense the entire $2,500 in 1 year. So that's what basically depreciation is like. If you purchase an asset like a car, for example, that the business owns, you purchase it cash for $18,000 or $10,000 or whatever. Even if it's used, you can do this. You in most cases cannot expense the entire $18,000 in 1 year. You have to depreciate it over the course of the lifetime of the asset. Now there are some exceptions to that rule. For example, there's a law in the books called Section 179 that you can actually depreciate the entire asset in the year in which it was purchased. And that will lower your business income, which in turn will lower your taxable income, because remember, all net income is then passed through to the owners and is taxable. It's another example of Section 179. So say a vehicle, you purchase a vehicle, that trucks, for example, that weigh over 6,000 pounds and have a truck bed that's over 6 feet. You can actually depreciate in the first year $25,000 of that truck purchase. And you can also do that even if you finance the vehicle. So if you put $5,000 down, finance the rest, and the truck is new, for example, and it's, say it's a Ford F-150 you purchased for $30,000, you can actually depreciate $25,000 of that truck in the first year instead of straight line depreciating it, which is a huge advantage and a significant tax savings. Pillar 3, retirement plans. So traditional or Roth individual retirement accounts. So as most of you know, Roth IRAs do not decrease your taxable income. You don't get the benefit now, but anything you earn when that IRA is realized is not taxed. But traditional IRAs, you actually can, those do lower your taxable income. The issue with traditional IRAs and Roth IRAs is the contribution limits. The contribution limits for 2017 this year are $5,500 for people under 50 and $6,500 for people over 50. That's as much as you can contribute in a year to those retirement plans. Self-employed people, actually, there's an advantage. There's something called a simplified employee pension or a SEP IRA or 401k, in which contribution limits are much greater, and these contribution limits will decrease your taxable income. The contribution limits are actually 25% of your net profit adjusted for self-employment tax. So say your net income of the business is $100,000, you can actually contribute to a SEP IRA $25,000 as opposed to a traditional IRA, which you can only contribute $5,500 and get that, $5,500 of your taxable income reduced. Whereas in a SEP IRA, you can actually reduce it by $25,000, which is significant. And plus, you're preparing for retirement. So there's some advantages there. You will get taxed with SEP IRAs when you take it out at ordinary income rates, but you know, in the now, it's actually a huge advantage. The cap for SEP IRAs or 401ks is actually $54,000. So depending on the net income of your business, if your business is doing really well, you can contribute up to $54,000, which is a significant tax savings, and helps you prepare for retirement. The other advantage from SEP retirement plans as opposed to traditional or Roth is, a lot of people don't know this as well. They think that you can only contribute until December 31st of that year. Well, actually, you can contribute up to the individual filing deadline, which in most cases, if you're a sole proprietor or single member LLC, is generally April 15th. You can contribute for 2017, for example, all the way till April 15th, and that will decrease your taxable income for your 2017 tax return. So that in the traditional Roth IRA, traditional IRA or Roth IRA, the contribution deadline is actually the individual filing deadline. With a SEP, you actually have until, if you decide to extend, so the extension deadline is October 15th, you can contribute for 2017 all the way until October of 2018 if you set up a SEP and do it that way, which allows you to potentially put more and more money into this retirement plan, which would reduce your taxable income for 2017. I talked about contribution deadlines here. Pillar 4 is accelerated expenses. So if cash flow allows it or permits it, you should pay for expenses now. That again, you know, in the example of, if you have an expense that's going to lower your net income, which will in turn lower your pass-through income on the personal tax return. Okay, so if you can do it, if cash flow permits, if you're looking at potentially purchasing something that's you know, less than $2,500, don't wait until January to do it. Do it now if cash flow permits. And the fifth pillar is deferred income. So something that is a misconception as well is that income received in the current year is taxed in the current year. So if you receive a check in the mail, for example, and you don't deposit it until January 2nd, that is against, you know, the principle here. What you're supposed to do is, if you receive that check, regardless of whether you deposit it, that needs to be counted as income in that year. Now, you can call your customers and tell them that to help them out, you will maybe give them better terms or extend their terms temporarily until next year. And that's maybe a strategy that you have so that your top line revenue is down, so that your potential taxable income is also down. But again, if you don't talk to your customers about this and they send you payments proactively, it's not like you can just, you know, wait to deposit that until next year and then not put that on your tax return. That wouldn't be correct. So in review, we have the entity structure, just making sure, because depending on what entity type you are, there's tax benefits to those. Capital asset purchases and depreciation in Section 179, you can get a huge benefit there. Retirement plans, depending on, you know, if you want to set up a SEP IRA account, you can contribute a lot more than you can with a traditional account. Accelerated expenses, if you can, if cash flow allows it, purchase expenses now. And deferred income, you can work with your clients or your customers to potentially give them better terms, so your taxable income is also down. With all of our clients, again, we go through this 5-pillar review. We make sure that they're, we will consult with them on whether or not it makes sense to become an S corp or whether it makes sense to stay an LLC. Jason's going to have better legal advice on the difference between the two, but I think we would be able to advise obviously on the tax benefit and the tax plan portion of that. And so there's certain entity structures that are just better than others on a tax basis, but they may not work for you on a operating agreement level, or if you have partners or something like that may kill the deal, as it were, and may not be worth the tax savings to deal with some of the loopholes that you have to, not the loopholes, but some of the requirements of filing, being taxed as an S corp. Anyway, so those are the 5-pillar reviews. I encourage everyone to make sure that their bookkeeping is in line and updated on a regular basis, so that these discussions can take place. Whomever you decide to hire as an accountant, they would love you if you came to them in the middle of the year and said, "Hey, this is my situation. My bookkeeping is up to date. Can we have a discussion about what my liability will be?" That will also save you money, because if you're confident that your bookkeeping is accurate and correct and up to date, then the accountant isn't going to spend hours in charging you by the hour to fix everything and then prepare the return. So yeah, that's my presentation. Again, our website is mazumausa.com. You can email us at info@mazumausa.com. There's our phone number as well to talk to any of us about what we have to offer. So